You're scrolling through your investment apps late at night, watching major tech stocks climb higher and higher, and you're thinking to yourself, what if there's another way? What if you could get in early on companies that are positioned to revolutionize entire industries before they blow up? Well, you're not alone. Millions of investors are asking themselves this same question every single day, and today, we're going to explore a sector that's absolutely buzzing with opportunity. Stay tuned because we're about to uncover something that could potentially change the way you think about building wealth in the stock market. Now, before we dive into the specifics, I need to be completely transparent with you. What we're discussing today involves penny stocks, and penny stocks come with significant risks. These are highly volatile investments, they have lower liquidity, and they can experience dramatic price swings in both directions. You should never invest money you can't afford to lose, and I strongly recommend doing your own research and consulting with a financial advisor before making any investment decisions. This video is educational in nature and should not be considered financial advice. That said, let's talk about what's happening in the aerospace and defense industry right now. This sector is experiencing unprecedented growth. We're talking about increasing government spending on defense, the commercialization of space, the rise of autonomous systems, and the modernization of critical infrastructure. These are multi-billion-dollar tailwinds that are creating opportunities for smaller, innovative companies to position themselves as critical players in this ecosystem. And that's exactly where we're focusing our attention today. The first company we're examining operates in the hyperscale data infrastructure space. Think about what's happening with artificial intelligence, cloud computing, and data centers. The demand for processing power has never been higher, and traditional data centers are struggling to keep up. This particular company has developed cutting-edge solutions specifically designed for high-performance computing environments. They're not just another data center operator. They've positioned themselves at the intersection of aerospace, defense, and next-generation computing infrastructure. Their technology is purpose-built for applications that demand incredible speed, reliability, and security. What makes this particularly interesting is the government contract space. The Department of Defense is actively seeking innovative solutions to handle massive amounts of data, and this company has already begun conversations with various defense contractors and government agencies. Their current valuation remains incredibly attractive, trading under $1, which means early investors could potentially see substantial returns if the company successfully executes on its contracts and scales its operations. The second company we're looking at is in the robotics and autonomous systems space, specifically focused on marine and subsea applications. This is genuinely cutting-edge technology. We're talking about unmanned underwater vehicles, autonomous systems for offshore operations, and robotics designed for extreme environments. The defense applications are enormous. The Navy needs advanced unmanned systems for surveillance, mine detection, and specialized operations. The commercial applications are equally compelling: offshore oil and gas, deep-sea mining, underwater infrastructure inspection, and marine research. This company has positioned itself as a serious player in this emerging market, and they're building partnerships with established defense contractors who need their expertise. What's particularly exciting is the timeline. We're not talking about some vaporware technology that might exist in 15 years. These systems are being tested now, and commercial deployments are happening or will happen very soon. The market for autonomous maritime systems is expected to grow exponentially over the next 5 to 10 years, and early investors in the companies building this technology could be positioned for life-changing returns. Now, let's talk about why these particular companies in this particular sector represent potential opportunities for penny stock investors. First, there's the growth narrative. These aren't mature companies in mature industries. These are companies operating in industries that are expanding at double or triple-digit growth rates. Second, there's the government spending angle. Whether you agree with it or not, the reality is that defense spending is increasing, and it's increasing significantly. This creates a steady stream of demand and revenue potential. Third, there's the partnership potential. Both of these companies are in conversations with established defense contractors and government agencies. If those conversations turn into contracts, the stock price could move dramatically. Fourth, there's the acquisition potential. Larger defense contractors are always looking to acquire innovative smaller companies that can accelerate their capabilities. A strategic acquisition at a significant premium would represent an enormous return for early shareholders. But here's where we have to pump the brakes and talk about reality. Penny stocks fail, companies go bankrupt, promising technologies never commercialize, contracts don't materialize, stock prices can plummet as quickly as they rise, liquidity can dry up, making it difficult to exit your position. Dilution through secondary offerings can significantly reduce shareholder value. There are hundreds of reasons why these stocks could lose you money, and you need to go into this with your eyes wide open. Never invest more than you can afford to lose, and never put all your capital into penny stocks. A diversified approach with penny stocks representing only a small percentage of your overall portfolio is the way to go. If you do decide to research these companies further, and that's a big if, here's what you should be looking for. Check out their financial statements. Do they have a clear path to profitability? How much cash do they have in the bank? How much are they burning through each quarter? Look at their contracts and partnerships. Are they announced? Are they in progress? What are the potential revenue implications? Examine the management team. Do they have relevant industry experience? Have they successfully built companies before? Look at the competitive landscape. Who else is operating in this space? What's their technological advantage? Read the SEC filings religiously. These documents will tell you more than any video ever could. In conclusion, the aerospace and defense sector represents one of the most compelling growth opportunities available to investors right now, and there are innovative penny stocks operating in high-potential niches within this sector. However, penny stocks are risky, volatile, and absolutely not appropriate for everyone. If you do your research, understand the risks, and only invest capital you can afford to lose, then maybe, just maybe, you could position yourself to potentially benefit from the tremendous growth happening in aerospace and defense technology. Do your own due diligence, make informed decisions, and always remember that no video, no matter how compelling, should be the sole basis for your investment decisions. Thanks for watching, and I'll see you in the next one.